managed to hold above the 22,200 print on the Nifty spot, 22,300 on the futures. But this morning, the talking point is going to be what the global commentary and the cues have been. While, of course, going by the print on both the US as well as the Asian markets, it is a very, very strong handover. But the intriguing point is the fact that Jerome Powell has flagged off elevated rates for longer, which means that a rate cut is not coming anytime soon. You've not seen any knee-jerk reaction reading into this commentary from the market so far, at least. He's quoted about an unexpected rise in the US producer prices as well. And the other thing, of course, has been the fact that US has hiked tariffs on Chinese imports. So, that's going to be the other thing. What does it imply for India? What does it mean for, companies which are into renewable energy, especially solar, and what it would mean for metal prices?
Yeah, so Fed again is pretty much changing the goalpost. It appeared at the beginning of the year that rates would come down. Then it appeared that they are not likely, they're going to increase rates. Now it's evident that inflation has not moved as per their projections, which means we are in for high rates for long. So if interest rates, they remain long, nobody was expecting interest rate cut, or nobody was expecting any change from the US Fed commentary. So frankly, from a market standpoint, I think it is turning out to be a movement. Aisha, there used to be a time when whatever the Fed would indicate used to be a sharp global market moving event. Financial markets would bend and roar and jump and soar depending on what Fed used to communicate. I think financial markets are not really now hostage to what Fed commentary of late has been. Just think about Fed communication. Fed communication has been constantly changing, at least in this financial year. And financial markets have just said, okay, let Fed do their own business, we will mind our own business. So global financial markets, and I'm talking about the developed markets, they are no longer really reacting, acting, or dancing on the Fed tune, so to speak. So for me, I think that is very important, that Fed is important, Fed is crucial, it is big. What they say, you need to acknowledge it, but markets not reacting to it.
What about the tariff hikes on China, though? Because that would have some implication for us.
See, this again, you have to also recognize that there is an election cycle in US. An election cycle ahead of US.
Typically the narrative changes anti-China.
Exactly. Which is that you're trying to boost manufacturing in US. So from an India standpoint purely, you don't have too many companies which are listed in US, with the exception of, let's say, Welspun and Hindalco and, couple of auto companies which have presence there. So nothing changes incrementally. But what it also means that if you look at some of the large sectors where India now seems to be having a global presence in terms of competing with China, for example, solar panel, or for example, automobiles, that's the space where manufacturing boost now will be given to Indian companies. So it is a clear message from US that things are moving as per what the world thought, which is that the China plus one strategy is only getting more and more endorsed. So if you are an investor, if you're in corporate, you would say, okay, I was in China, I need to move out of China. An anti-dumping duty which is coming on products where China is dominated, I guess the US wants another alternate supply chain to get created.
Yep, indeed. That was the commentary that we had coming in from the US, though, by the way, China has said that these trade barriers will impact the wider relationship between the two countries. But that aside, as Nikunj spoke about, we seem to be on our own path, irrespective of the kind of commentary that we're getting in from the US. And that recovery was pretty evident in yesterday's trading day. Take a look as to how we scaled up. And by the end of the day, pretty much close to the day's high, wrapped around the 22,200 mark. In fact, what was interesting is that the volatility index, or the India Vix as well, broke that 13-session gain. And you did witness the fact that a lot of the other indices as well followed suit. The total longs were at a 3-month low, and the total shorts, in fact, at a 3-year high. And irrespective, Nikunj, of the fact that that FII selling spree only continues, we have seen a bit of a recovery kick in.
See, this week's price action is impressive.
Yeah.
It can be called impressive because you've had a decent recovery. Important support levels of the Nifty were respected. And you've seen a comeback in typically what could be called as some of the capex, defense, and there was evidence of pre-election buying. So the nervousness, if I look at the pure price action in the market, I think this week was not there. Unlike last week where the market reacted, small cap stocks were on the butcher block, There were no takers on the downside, and it was almost like a straight line fall, and everything was centered around what really could be the, what could really be the election outcome. I think that fear has not faded away, but that fear is not occupying center stage. If you are a trader, you would say, I am impressed with the rally. Is it time now to shift positions from short to long, or is it time to just cut shorts? The chink in the math is bigger than a chink. I think the cross for the bulls is that FIs, they continue to sell. So psychologically, even if markets, they want to go higher, this 3,000-4,000 crore of FI selling which is coming, I think is something which will be an impediment. So that will arrest the free flow in the market. So even if local crowd wants to move into a pre-election, pre-buying mode, FI selling, I think, would be the dominant feature which would be restricting it. So I think it suffices to say that in the near term, it appears that you have a firm bottom in place. It also is evident that last week fear in terms of which was there in small and mid cap stocks, that seems to be getting arrested. The risk reward ratio is not in favor of going shorts now. If you're short, no, you cover your shorts. And the risk reward ratio now is more favorable in going long or putting some money to work. But the FI selling is something which would be in spoiler.
Yeah. Well, back home, the biggest message came in from the finance minister herself, talking about efficient markets is the topmost requirement, is a strong and stable government at the helm. That's the word coming in from none other than Nirmala Sitharaman herself at the Bombay Stock Exchange event just yesterday. The FM, of course, also lauded the performance of the stock markets and how housing savings are now making a shift towards equity markets. She also put in a word of caution on reckless retail trading in the F&O space, and also talked about the India Vix and the volatility that it's seeing off late.
Stability of government is the first criteria for markets to be efficient. Stability of government, stability of policy, particularly of taxation policy. India's financial markets have far exceeded everybody's expectations in the recent past. And therefore, all appreciations to you all for having performed and performed with distinction. Mutual fund investors and average monthly mutual fund SIP contributions have grown 4.5 times in the last 7 years. Indian savings moving from fixed deposits to come into mutual funds and SIPs. Any unchecked explosion in retail trading of futures and options can create future challenges, not just for the markets, for the investor sentiment, and also for household finances.
That's the finance minister speaking at BSC, and Nikunj, stamp of approval lauding the Indian financial markets, saying that they have exceeded expectations.
Yeah, by any yardstick, financial markets have actually done exceedingly well.
Yeah.
So there are a lot of things which are obvious, but what is something which in a sense is something which seems to be an endorsement in terms of the thought of the government and the current administration is that they are excited about the fact that Indian saving is moving out of fixed deposits and it is moving into equities, which could be called as much more productive asset class, and on a longer term, equities will certainly help you beat inflation. If that is something which the finance ministry and the finance minister is particularly excited about. Now, specifically on comments, don't want any instability in the financial market. Very confident that the current administration will be voted back to power. And the volatility in the market is something which could be a short-term market reaction. And there is no need for volatility index to fluctuate. So pretty much the obvious here. And I guess for me, what really matters here is that there is, while we can endlessly talk about, okay, there is bubble, there is trouble, rich valuations, F&O, a lot of retail participation, the administration is absolutely clear that they will continue to applaud and they will continue to promote Indian saving moving out of fixed deposits into SIPs and into long-term equity investing, because if India is growing, equity investment as an asset class will grow, and that is where maximum wealth creation historically has happened.
If you like this video, then like, share and subscribe to ET Now.